This is Pre-Market Prep. I'm Brianna Valesky sitting in for Joel Elconin. I'm joined by Jill Malandrino. She's the Product Development Manager for OptionsProfits at TheStreet. Jill, thanks for coming on the show today.
All right, thanks for having me.
So we got the July retail sales numbers last week. They came in about 446 billion. That's an increase of 0.6% from the previous month and up about 2.4% above July 2014. What was your take on these figures, and what do you think it shows about the economy?
What I think when you take a look at retail sales across the board, even though there was a bit of an uptick, as we say with retail stocks, it's going to be a tape of the have and the have-nots. And if you drill down more into the consumer discretionary space, initial Q2 reports suggest that there's softer consumer spending in the environment overall. And I think it's really coming into play right now that analysts have had concerns of less spending in a low gasoline environment, and that was a big part of the thesis that you'd see increased consumer discretionary spending, and we're not seeing that as much as analysts thought that we would see. So, for example, looking at Disney, which is a cable stock, I realize that it's unrelated, but we saw that they were going to dial back on ESPN guidance, which is of all networks, your must-see network because it's happening real time. Once the sports event is over, it's over, and what we think we're seeing there is consumers are dialing back on discretionary spending. Cable and related items are where you're seeing that dial back. And I think areas that you're going to see the spending are consumer electronics, consumer discretionary items that are definitely on trend and off. Retail discounters are also going to benefit as well because in today's day and age, and CNBC did a great comparison yesterday from 2004 to 2014 spending, the type of items that we're allocating discretionary resources to. Might have been more hardline retail in 2004, whereas in 2014 they did a 10-year comparison because that's we only had back to school up until 2014. It's more electronics. It's more online type of shopping because consumers in today's day and age in an on-demand environment expect discounts right from the get-go. Right. So that's why I think your discounters are going to do well, like your off-price retailers, TJ, Ross Stores reports after the close today, your on-trend names like Under Armour, like Nike, and your distributors like a VF Corp.
So let's talk a little bit more about those discount retailers. TGX reported second quarter net income of 550 million, right. 80 cents EPS. Analysts on average were expecting 76 cents per share, so that's a beat on the EPS. So what are you looking at in TGX right now?
TJ was a great quarter. It's a name that you and I have spoken about for a good part of 2015, and the original thesis was with the West Coast port shutdowns, single-name brand retailers, we're going to feel some pain, but the discounters like a TJ, like a Ross Stores, they are the ones that are going to have more pricing power here because they're just getting it passed through right to them, which is great for their margins. That's why we continue to like them. TJ, on a more company-specific story, rose to all-time highs, and that really strong beat obviously came in a bit with the rest of the market. The comps are really driven by traffic, and you don't really hear that as much when you look at brick and mortar and other areas of retail. So the actual foot traffic drove up the comps. They're correctly strategizing on pricing, the value or the perceived value of their offerings. Their buying strength is certainly helping margins. They're improving their e-commerce all the time, and they're growing globally. In fact, they're one of the largest off-price discounters in Europe. And, I think one thing about TJ relative to other retailers, they're operating on all metrics. And management expects this momentum to continue, and I really think that we're going to see that through back to school. But I also want to remind everyone as well, when you look at back to school, we have an extra week this year because Labor Day is on September 7th. So the comps are going to be a little bit skewed when you look at August because shoppers might be starting a little bit later, but September could be really interesting to watch because we're going to have that one extra week.
Wow, that's a great point, bringing up the fact that there's an extra week for back to school. Can you tell us a little bit more about Ross Stores? That's one we usually talk about.
Sure, yeah. So they report after the close today, and it's interesting when you take a look at Ross. They caught a bid off of TJ due to the off-price model. That's not really a surprise. Last quarter, even though they came in with a beat, shares declined because the expectations were really elevated. And they report after TJ, so they kind of always have to follow that momentum. And again, expectations are super high going into the second quarter print. but if you look at the company on an individual basis and as a group following TJ, if you were to see shares come back and they are weak, if they don't exactly meet expectations because they are super high, I would definitely use that as a buying opportunity for sure. I don't know if I'd buy it into the print. I don't really like to do earnings plays like that. I like to take a look to see what happens following the print and how the stock consolidates. But if this one is weak, I would certainly take advantage of that. It's one of the best operating performers in the group. And the three things I would pay attention to when you look at the off-price retailers in general, the West Coast port shutdowns, as we've mentioned several times, it didn't impact the off-price retailers like single brand names. So what was the percent of better buys that these companies got and how it impacts the margins? How promotional was the environment in Q2 versus Q1, which is something you should look at regardless if it's off-price or single brand. And of course, wage investments, that increasing minimum wage and increasing pay overall is something that's a big topic when it comes to retail and even restaurant stocks and so forth. Those are the three big things I would look at: is the impact on margin of West Coast, how promotional the environment was in Q2 versus Q1, and investing in wage growth.
I'm so glad you brought up investing in wage growth, because that's something, like you said, we're seeing in both retail and food stocks as they try and compete against each other, because it seems
Right.
like there's a lot of turnaround as people are jumping between those, employees are jumping between those two sectors to try and get those more competitive wages. But so you also mentioned some of the athletic brands. Nike, what's your outlook on
Yeah.
Nike right now?
This is, you know what, athleisure is the trend right now. Not only is it for back to school with kids shopping, certainly people, even in the corporate environment, you're starting to see athleisure trends in the office on Fridays. It's acceptable to wear these after the gym to work or to go out, and I just think that it's such a powerful trend right now. I think it's going to be great for names like Under Armour, like Nike, for back to school and through holiday 2015. Under Armour is a really interesting story because this is really where the brand focus is key. So they have basketball with the Curry One shoe. They have golf with Jordan Spieth with his impressive performance. And in terms of all the brands, when you look at Under Armour, Nike, and other competitors, Under Armour led all brands in terms of sales growth in July, with total footwear and apparel sales at 37%. 37.8% year-to-date, and this is according to SportScan info. And what's interesting here is this is really where the brand is what's driving the sales here. So Nike owns 90% market share in the basketball shoe category. Under Armour's made an impressive gain early in the year with the Curry One shoe, and of course the sales were fueled once Golden State won the championship. Of course, that lended a boost. As a result, the Under Armour saw a traffic increase of 300% to its e-commerce site, and during Q2, and because of that traffic, it translated to growth rate of 40% in shoes. And again, this is all according to SportScan and Under Armour figures. So it's showing how brand really can lend to sales growth. Even if you take a look at a Google search trend, if you put in Under Armour golf, that tracked up over 80% year over year, starting with Spieth's win in the April Masters and his performance through the summer. So I think that's a really interesting story because it's not just an operational story here, it's really where celebrity name is lending to sales growth. And Nike, same thing as well. I mean, they've cornered the market in sports apparel shoes, but now that they've really upticked their athleisure lines, even in lady sales, you're really starting to see the sales growth transcend as well there. So I really like the two of those. We've looked at a couple options plays on these. The Nike September 115, 120 I like a lot. It performed well yesterday in kind of, a tricky tape, down a little bit this morning, as is the rest of the market, but I definitely think with the potential for a strong back to school and that momentum going to holiday 2015, those are two names that you definitely want to keep on your radar.
What about some distributors? VF Corp. They've got brands like
You know what?
JanSport.
VF Corp is interesting. It's, one of the names where not only is it a distributor, so it has a little bit less pressure on it in terms of relative to a single brand retailer. But the thing with VF Corp is they literally are completely invested in the sportswear trend, and almost everything you wear, you could be dressed from head to toe with them. One of my colleagues over at TheStreet pointed this out in a piece that he wrote, and he was mentioning that you have North Face, there's your jacket, Timberland, there's your shoes, Wrangler, there's your jeans. You can literally be dressed from head to toe, and I think there are in the right verticals. Denim, that trend is certainly increasing. They just unveiled jeans with stretch fabric for women, okay, which is almost like that yoga pant trend right there. And I think, they have, from an operational perspective, they have a little bit less exposure than the single brand names. And I think this is an interesting to watch. The chart on this one, not as much as a technician, but I do follow a few chartists that like this one, and it can be a very tradable name. So I think those 5 names for back to school and through holiday are really where you're going to see the momentum this year for sure.
Another distributor, L Brands, reported earnings yesterday. EPS was in line, but sales were down slightly. They've got brands like Victoria's Secret, Bath and Body Works. It seems like what they're struggling with is the brick and mortar.
You know what? I'm not surprised to see that, and I'm not too concerned when you look at a VF relative to an L Brands, because if you think about it, again, going back to where consumers are spending their discretionary money, it's more towards discount, it's more towards necessity, it's more towards electronics, right? So, and especially going into the back-to-school season, you're going to be more focused on buying kids' jackets, kids' shoes, relative to lacy bras and pretty-smelling candles. There's a big difference there in terms of those two distributors. And I also think, too, again, consumers go in with the expectation of a good value and a discount. That's just the way the on-demand environment is, a la Amazon.com. And, speaking personally, Victoria's Secret quality, it's a lot of money, and they don't hold up well. And if you're gonna, even drill it down to Bath and Body soaps, instead of spending $5-6 a bar on soap, consumers are looking at getting, multi-packs at that same price level. So I think when you look at the two of them, it's discretionary versus need. And right now, especially into the back-to-school season, that's really where discretionary money is going to be focused.
What about Walmart? They came out with earnings. They beat on the top line but missed on the bottom line. They also lowered guidance. Honestly, it seems like Walmart stores are already everywhere. Is there any growth left for this company, and can they compete with things like Amazon?
I think the biggest concern here is when you look at names like that, like a Best Buy, like a Walmart and so forth, is being able to be competitive in an environment like an Amazon. Going back to the whole discount consumers expect and the on-demand environment. I think the issue is with Walmart is they did not they weren't a pioneer in terms of what they need to do with their e-commerce, their social media, their perception of value like an Amazon might have been. Whereas a Target tends to, even if you look at it from a consumer perspective, you go in there, the stores are cleaner, it's more of an exciting shopping experience. They've always been pretty aggressive with their e-commerce and social media strategies. So I think that's really where the difference was. Target, from an operational perspective, is a much different story than Walmart. So if you isolate the operating part of the story and take out the consumer part of it, that's really where your difference is, which is why Target had that phenomenal quarter.
Yeah, absolutely. Sears also reported early this morning they lost money, but not as much as people thought they were going to lose. They had a $2.40 estimate or loss. $2.40 loss versus the estimate of $2.50. They did beat on revenue though, $6.2 billion versus an estimate of $5.72 billion. Are they? I mean, do you think they're actually doing better, or have they just closed?
I don't know if it's a story of less than bad news is good news. In my mind, Sears has been dead money. From a consumer perspective, I can't even tell you the last time I stepped in a Sears.
Same.
You drive by their stores and you could see like the leathers are falling off of the brick walls outside. There's never any cars in the parking lot. I think if you were to look at Sears, and I think this is a thesis here, it's really based on what's going to happen with the real estate. I mean, I'm actually surprised they did derive that much revenue. And again, I don't know if it's a case of less than bad news is good news here, but out of all the other places that you can invest in retail, I just wouldn't, waste my time putting money in here. I think there's much more compelling stories to look at. And, again, if something were to happen with the real estate, as you know, any sort of rumor that hits the tape can certainly move these names. But if you're looking for a longer-term, more solid story, the names like I mentioned, like a TJ, like a Ross, on-trend names, Under Armour, Nike, Lulu is another one, Urban is another one that I like that's on trend right now, and a distributor like VFC versus in L brands. But those are the names I really think. I think if you're going to look at the trinity of retail right now, off-price, on-trend, and distributors are really where you want to be.
Tell me a little bit more about your thesis on urban, because that's one of the teen retailers that's actually doing better than something like an Aeropostale or American
Right.
Eagle.
Again, when it comes to these names, the haves and the have-nots, it's really all about what is on trend right now, and operating is crucial right now. The operating metrics are what count the most, because if you're not on trend, you're going to have to derive your quarter from somewhere. Urban, they've been in a turnaround story for the past 18 months to 2 years. We're starting to see the operating metrics really come to fruition, performing much better on a margin, inventory, and promotional level. The quarter that they just posted, okay, but I really think that this is a name at these levels, especially that you'll want to take a look at. I was trading it when it was in the early 40s, and there was pain in between. But I think where it is right now, it is certainly a position that I would take a look at. I like it from a fundamental perspective, and I think this is an interesting level to get involved here.
So we are in approaching late August right now, which we are. You mentioned briefly the back-to-school season. Over the next couple of weeks, what should traders be looking at as we get into that back-to-school season?
When we get into back to school, and this is kind of always a tricky time in the market, because you have that slow August trading. And right now, the way the market has been trading, it hasn't been the most clean action. You're sort of getting those dips on the open, get some buying in mid-afternoon, and then it's really shaky for the last hour. And I think that's kind of what we're going to see, because now that we're out of earnings, we're going back to what we saw at the end of June, beginning of July, where there's no fundamental news to trade on. So we're really looking at macro headlines. Everyone's talking about interest rate hike speculation, which is such an exhausting subject at this point. What's happening in China? Is the demand real? Are the numbers real? So we're back to trading around macro headlines, which lends to some really boring, dull trading. But because it's so thin out there, you have to be careful. If we drill down and look to back to school, I'm pretty excited for this back to school season. I don't think the thesis of prices at the pump are lower, that's really going to translate into traffic analysts might have expected. It's going to be picking and choosing your spots as to where that money is going to be allocated outside of savings. And I think you're going to want to look at consumer electronics. You're going to want to see how these off-price retailers perform. Now, same-store sales comes out the first Thursday of each month. That's not going to capture that last crucial week of back-to-school shopping. So it's actually the first Thursday in October that I want to take a look at, because expectations are for a stronger September with that extra month. So that's really going to be what you want to take a look at to determine how strong back to school was. And of course, then you have October, early November earnings, where we'll get more detail from the companies. But even out of back to school going to holiday, again, I really think, I remember, in the, when was it? Late 90s, early 2000s, and I was working in Champs and Foot Locker in the sports stores. That's when it was incredibly strong. It was such a strong sports trend. Everyone had to have the pullovers and the jackets and the jerseys. Everything was all about buying licensed sports apparel and shoes. And I think we're starting to see that again, obviously a little bit different than what we saw 20 years ago, but it's going to be all based on the athleisure look, what celebrities, sports celebrities are sponsoring, the right apparel, the right shoes, and I really think that's where it's going to be this year. Automatic discounts and athleisure, I think, are the two biggest trends that you're going to see.
We've been on the line with Jill Malandrino. She's the product development manager for OptionsProfits at TheStreet. Always comes on with a phenomenal, detailed look at the retail sector. Jill, thank you for joining us on the show this morning. We really appreciate it, and we'll definitely have you on again soon.
All right, you got it. Thanks, Brianna.
Have a great day.
Take care.